Okay, hello everyone. Today I will be explaining the manual method that I use to make aggressive trades, but they are usually with small amounts, and I try to make as much as I can on these small amounts. They are based on smart money principles and some indicators that I use as well. So these are based on smart money principles and some other indicators I use as well. So I will be explaining these methods that I use in manual trading to produce such large returns. Of course, to be able to make such large returns, there's a huge risk. But when you know what you are doing, you can use leverage to the extreme. There is no problem. I use an account with 1 to 500 leverage. So this is, I mean, if you want to do these kind of percentages in one day, you need this kind of leverage, like 1 to 500 and at least, and maybe above is better. Anyway, I don't advise with actually above if you want to take like very hard risky positions, because then they will blow out very quick. So it's better to be. I mean, the maximum I would advise is actually 1 to 500, because it will give you a little bit of breathing space. If you get too aggressive, it will control your nerves a little bit. Okay, so let me share the system I use for this. And all right, so first I look at this Take Pro Pips Dongxian Trend Pro Scanner. Okay, it gave me a buy signal on the GBP USD, as you can see here, and then it retraced. Now this retracement, what I do usually to find a entry point for the retracement to start, like it's called like a point of interest, I look for this pattern in the market. This pattern in the market, it works like this. When you have an upward move, okay, this is an upward move. The first candle which retraced, okay, the first candle which retraced, like this is like an upward move. The white candles are the bullish candles. The black candle is the bearish candle. And then it just had one bearish candle and then it continued the move up. So it had only one bearish candle. This is what I look for in retracement targets. Now, how I will deal with this? What I do, I will bring the Fibonacci retracement, but I only show the 50%. I don't show the other values, only the 50%. What I do, I put the beginning as the open price and the lowest point of that candle. As you can see here, the market yesterday, it came down to this level exactly and started to show that it wants to bounce from this level. Now, this is what I'm looking for. I'm looking for this kind of strength, that it's starting to show some strength. Now, this coincided with other patterns, which I will show you, like the system I use for entries and stuff. But this is the main thing. I need to have a point of interest, like my main area of interest. Let's just put a rectangle so it will be clear. It will be from the midpoint to the low. You see, this is where we are interested in checking out if the market will start to show some strength or not. Okay. Now, today I started the trade based on the knowledge that we are at a very major support that we should bounce from. What I did, I took out this set of indicators which I use. Now, this is the Bollinger Bands 200. Why the Bollinger Band 200? I use the 15-minute charts for day trading, by the way. The Bollinger Band 200, it gives a better um, uh, estimation of where the low of the market should be. Now, we know this is from yesterday. This was the middle of the candle that we talked about earlier on the 1-hour chart. Okay, we only do this on the 1-hour chart. So on the 1-hour chart, we will know that this happened. Now, on the 15-minute chart, as you see here, I use the indicator DWM Signals. Now, this gave me a first signal that it's starting to go up. I don't buy on the first signal. This DWM signals, I use them to help me understand if we are going to have a market structure change or not. You know, a market structure is based on if like it's an uptrend, what it means is we have higher highs and higher lows. If it's a downtrend, it means we have lower highs and lower lows. I use this indicator in the same way to tell me if we are going to have a higher low or a higher high or what we are going to expect. So I don't buy the first signal. I let it bounce and it will give me a buy signal and I will let it go down again to test it. Now, if I will get a second signal here, as you can see, it gave me a second buy signal, which was higher than the previous buy signal, which was below the floor, which is the Bollinger Band 200. And it managed to do it by going above the Ishimoku cloud, which I also use in a special way. I take off everything. I just keep the Ishimoku cloud. Now, when I have this buy signal on the second buy signal and it's a higher low than the one before, then I will so I put in the morning, as you can see here, I started this morning by depositing $100. All right, this is what I deposited this morning, $100. Now, when I received this signal, I entered 0.05 lots as much as possible with the leverage allowed. So until I had no free margin. So I kept on buying 0.05 until I had no free margin. Why I do this? In case the market will go down more than it should, like here, it went down more than it should. It can, the broker will allow you to, close the position. The broker will automatically close the position for you, slowly. So if you put one lot directly, or let's say 0.5 lot, and it hits stop loss, he will close it all. So I don't want the broker will close everything. I want him to close parts of it. So sometimes it can help and bounce, because here, as you can see, the market, it gave up an upward buy signal, but it didn't mean that it cannot test the low more a little bit. But it doesn't matter, since we have a higher low than the previous one, which was at the point of interest, the area of interest, this one, then we are ready now to go up. So this is what happened. What happened today, I started buying here, and then when the market went up, I continued to buy again. I continue to buy as much as I can, as much as possible, until it crosses above the Ishimoku cloud. Because when I buy here, I know that my risk is limited. And when I add above the Ishimoku cloud, it means that I can add to the winners. And when it crosses the Ishimoku cloud, then I will have more confidence with the trade, because now I'm with the trend. So now the trade is with the trend. Now the target for this trade is the top of the Bollinger Band 200. So this is the target for the trade. As you can see here, this is the target. So I go as aggressive as I can, and then I wait for another sell signal, and then it goes and gives me a test of the middle of the Bollinger Band, this Bollinger Band 200. it gives me a test of it, and then another buy, and then I add to the positions that I had. So I continue adding. Now I'm adding with the profits. So the more I add, the more I will be adding with the profits here, and I have the confidence that it will continue going up and going to the target, which it managed to go to this target. Now, if it went down, like here, it gave me the buy signal and it went down, I would have lost $100. But because I played with this plan, I made 400, like $358 profit, which is like 350%. So this is exactly the strategy I use for making a huge ROI in one day on like normal moves. It wasn't like a huge move. Like, okay, it was like 80 pips. I mean, if sometimes you can have more than 80 pips in some cases, but for today it was 80 pips, and you can. I made 350% on the account using this much of this strategy. Okay. So I first use this, the take pro pips, Donchian Trend Pro Scanner, to find trades which have around 80% probability. And then when they retrace, I don't just take it here. I wait for the retracement, which happened, as I explained, to a point of interest. This is where I start to look for a bounce. Then I confirm with a higher low, which is confirmed by this higher low, which will give me a signal by the DWM signals. It will give you this higher low confirmation. And then I start buying, and then I become very aggressive in my buying and add more when I cross above the Ishimoku cloud. Okay. So this is the strategy I use, and I hope it's clear for you. And if you have any questions, please let me know.